All right, good morning, everyone. It is Futures Brizio here, and I am live here, I hope. It is January 22nd, 2026, 11:11 a.m., and just wanted to make this video here. And, oops, sorry, we're on the other one. Okay, so I figured I'd try to do a live stream here. I don't know how this is going to come out. Um, but we're going to see if we can get this done. So what we're going to do here is just do a review of where we're at today. January 22nd. All right. Okay, so let's just jump right in. And I know this is a little clunky, guys. So, all right. So let's take a quick look where we're at. So we'll start with corn here. You can see I have this open trade on corn. I actually took this yesterday, and if we recall on corn, we are based on the COT data looking for short positions here. We have our commercial COT index with our commercial traders coming out of this uh, extreme short position, which means now they're starting to distribute. And, this was as of the January 5th report. Then we had this one that came out on the 12th, and that's kind of where we're at right now. And you can see that we have been trading down. We made this big correction up, and then we've had this kind of bearish engulfing candle. It's having a little trouble getting past this area here. But anyways, I'm looking for prices to continue down and at least get back towards these lows right in here. So that is an open position that I have right now. If we look at rice, rice again based on the COT index, we're probably going to see higher prices coming in rice here. You can see we had this move down out of this extreme long area. And so usually, again, as I've said with this index, when it comes out of one of these extreme areas, that's when the price usually actually starts going into the direction of where it came out of. I know it sounds a little weird, but again, you have to remember how commercial traders work. And so this has come down out of the extreme long position. So I actually expect higher prices now. Okay. And that is what we're seeing here. So I'm going to wait for a little better pullback and, get something, a little better set up. I mean, the last real entry here was this candle, which was on Tuesday of this week. Okay, so I'll wait for, another pullback. I mean, we could get higher prices from here. We've had, basically a day or so of a little bit lower prices with this candle right here. This is the current candle, and but I'd like to see a little bit more of a pull. We can get these one candle pullbacks like we had here, and then price went up. So I'll kind of leave it for judgment when it happens, but I'd like to see a little better pullback at least for a couple of days here. And we can see we did have this one start to go up, and then we had this big wick came down. And if you were in this long and had a stop loss sitting like underneath this little doji candle, this wick would have taken you out. And that was a clear liquidity sweep. All right, so there's no trade there, but I am looking for longs. Soybean oil, again, if we take a quick look at COT, again, we should be starting to see higher prices, and indeed we have been moving higher. So again, with this one, I'd like to see a little bit better pullback. We did have this big bullish candle yesterday that went up, made new highs, and now market's kind of resting. So I'd like to see, a day or two of this kind of easing back a little bit, and then move up and start going higher. But overall bullish on this, but there's no trade there right now. Soybeans, again, kind of the opposite on this one, at least according to COT, we should be looking for short positions. We do have this little range we're stuck in here on the daily chart. Okay, so we've got this recent swing that led to this low down here, but this did not break the low. So that is always a little bit of concern when you don't, you're in a bearish market in this case and you don't make a new low after a pullback. That just means the buyers were really strong right here. It doesn't mean it's going to reverse. You can see price is now running up to the upper end of the boundary. And as long as we kind of hold under here, I'm still bearish in this market, and according to the COT. But you can see for the last week or so, price has run back up towards the upper end of this boundary. Okay. And you might even be able to say that the true swing high is actually up here. Okay, because so even if price spikes through this equal highs up here, we've got multiple equal highs. Even if price spikes up into here, that still would not invalidate the short bias, because it was really this high right here, this candle here, that led to these new lows. So this move right here actually could have just been part of this larger move. So even though once it came up here, it didn't make a new low, it did make a new low from here, right? It came down, came up, came back down to that low. So really, for a complete reversal of this market direction to go long, I would have to see a break above even this rectangular box here. So I wouldn't be surprised if we see some sort of a wick spike through into this box. But ultimately, I think it will, just based on COT data, it should turn back down. But there's nothing to do with it right now. If we go to a 4-hour chart, you can see it's reacting off that level now. And, you can make an argument that it's going to start turning more bearish now. But now that we're up here. But you got to be cautious, because sometimes you get this little pullback at this resistance area because everybody's trying to sell in here. And then you get one more push up through there, and, it wicks people out because they have their stop losses sitting above these equal highs. That's a classic, buy side liquidity up there. For people that go short at these resistance zones, they put their stop just above it, and then they go up and they tag it one more time. They throw, some buying through there to take out all the stop losses, and then the real move down starts. So I would be a little bit cautious of this. I don't like these equal high type things. But if we really start to get a shift in market structure on the shorter time frames showing down, then maybe that will be it. But I wouldn't be surprised if we see another at least wick up into this area right here to run all these stops. Okay, but either way, I'm not trading it at the moment. Okay, on to Canadian dollar. COT for Canadian dollars, to me, is not all really that interesting. But this does appear that it looks like the Canadian dollar wants to start running higher. So on the COT index, it is still in the extreme short area, and which came out of the extreme long area. So as long as it came out of this area last, so you start looking for higher prices. And as long as it stays in here, I know, again, it's counterintuitive, but it came out of an extreme long area, and now it's in the extreme short area. However, this is not a place to go short. Until it starts to come out of this extreme short area, then that is suggesting, lower prices. But it could chop around in here for a long time underneath this red line, and the market would still be bullish. Okay, so just keep that in mind. So, I would mark this as kind of our swing point now on this weekly or daily chart right here. And so now any pullback here on the shorter time frame would be a buying opportunity here. So net long, I'm net on this, I'm bullish on the Canadian dollar right now until we get a change in the COT index. All right, here's the other position that I took. I took this one this morning, soybean meal. And again, soybean meal on our COT is still bearish. We did have this little bend down in the COT index on the 12th. But on the last update here, however, overall, we're still coming out of this extreme short area. Okay, so I would expect that, I mean, this may pull back a little bit, but ultimately this will turn and continue up, coming out of the extreme short area, which means lower prices. Okay. So on that basis, you can see we're clearly stair stepping down. Here's our last swing area on the daily chart. We had price come up here to this previous support, now acting as resistance, seemed to be reacting off there. So I thought that was a good place to try to take a sell from. Ultimately, this could continue to go higher, but it does look like it's reacting off of here. In terms of Fibonacci, again, I'm not really a fib trader, but if you wanted to put one on there, we did reach the 50% fib level, which is kind of a minimum in terms of like value to kind of sell at a premium. You want to try to hit that, at least that 50% level. Now it could come up higher. You can see I have a very tight stop loss on this. So ultimately, if it does continue higher, I don't want to be sitting in a bunch of drawdown. I'll just, get out of it and wait for it to make another move down. I kind of preempted this a little bit by not, waiting for the higher time frame candle to change. But if we go to a shorter time frame, here's the 1 hour chart. And you can see the stop loss here is pretty tight. So if this rolls back up and takes me out, so be it. Then I'll just wait for a better opportunity. But I am still bearish in this market anyways. But I wouldn't be surprised if this continues higher. I could be a little bit early on this. So corn we already talked about.